I was asked if I would circle back around and cover rapid trend gainer. I haven't looked too much into it, to be honest with you. Um, I don't day trade, so it's not something I really look at. You don't have to just day trade with it. You can do other trading with it as well. You can swing trade. You can't really scalp with it. 15 minutes is the lowest you can go to for that. If you want to scalp, you're looking at Infinity Scalper. Like I said, you can swing trade, but there's other products you can also look at as well for swing trading. Pips Wizard Pro, and if you look at, I'll just pop up the daily chart here. You can see we got some swing trade setups as well. So you know what, you're gonna have to do your own testing, and maybe I'll start covering some swing trades using this and compare it with Pips Wizard Pro if that's what you guys want. So, anyways, I was just asked to circle back, and I will. Now, key with any of these products, and it says right in the training manual, make sure you're trading in the direction of the trend. Now, trend is going to be different on every single time frame. Our daily trend might be up, while our 15-minute trend might be down. You can look at the higher time frames if you'd like, or you can just keep it simple. Remember, we're only going for small little moves here. We're day trading. So generally, 3 to 5 times higher than your time frame, or you just stick with the time frame you're looking at, especially if you're really good with price action and structure. And it also talks about the best times to trade, and it's London session and the morning of the U.S. session when you have those two overlap. Anytime else, you're not going to get a lot of the movements that you may like to see. But let's take a look at just a few pairs, and I'm going to show you just a few different things here. So let's take the look at the RSI. Usually I use moving average for the trend determination for these products. But for this example, let's look at RSI. This is a 14-period RSI. You can change any, if you want. But I just use a lot of the default settings if I ever use an indicator. And all we're going to do is we're going to use that 50 level, all right, for strength. And the reason why I don't really care much for this as a way of using the RSI is because you can still be in an uptrend and the market dip below 50, because there's a range that price will find support at. So just keep that in mind as well. An indicator is an indicator. So we have our first setup here, and this is at 8:15 in the morning, and you certainly can take this trade. You still have the London sessions open, so it's 8:15. Make sure it is 8:15. Yeah, it's 8:15. And here's our setup here. The red candle shows up. Our RSI is below 14. We get on the close if you want. Depends. Some people just trade when they see the arrow. You can just go with the close. Let's just go with the close. Here's our targets down here. So your first target's pretty quick, right? It's 9 pips. That's almost a scalping style. And then you got 18 pips to this one here. Here's our stop loss, but you're out before that happens. Come back around, and this session, this is the next day, so you only really had one day trade. Using the 15-minute, there might be something else on the 30-minute. So here we got 3 o'clock in the morning. That's London, right? We are over our 50 level. Here's our close. Same kind of candle. Rock is up for 22 pips. And that would have been your session. Okay, done. Let's look at the euro. That time is 3:15 in the morning. Well, again, that's London. Getting on the close of this candle. Wow, that's pretty quick, right? And I'm going in the close. I just want to keep everything objective for everybody here. Okay. So you got 7 pips. Now, depending on where you get in. Now, I'm going to show you a different thing. It talks about profit targets in a minute. And I want you to keep this number in mind. Keep, about 40 pips in mind, okay? Keep that number in mind. And then we come around to the downside at 8:45. We've dipped below, get into the close, drops for about 18 pips again. Let's look at the euro yen. Where are we here? Where's my arrow? It's probably in there somewhere. Oh, there it is right there. It's a short. This is at 18:15. Do we trade that? No, we don't. That's 18:15. That's military time, obviously. 6:15 p.m. New York time. We're not going to trade that. This is 2:30. And again, we don't trade that. Here we got 3 o'clock in the morning. London session. Again. Now, here's the thing. And I want you to take a look at this. And if you look back at the euro. Take a look in through here. Okay, 13 pips. Let's look back here. What happens during the Asia session is you get these ranges, right? So price compresses. When price compresses, you're going to, and price breaks out. Remember, these are using an indicator, right? So these targets are going to be based on the preceding price action, which is this, right? Sideways. So these are going to be smaller. And this is where we can take a look at what I want to show you. This. Different ways to exit your trade. You do have the different lines that are printed. Okay. Option 3, the yellow lines, dynamic. Option 4. No, option 5. Strong support or resistance level. It's the method that generates exits earlier, so you take profits earlier. That's not necessarily true. It depends on when it... for that example there we just looked at, you can see that we're looking way up here, right? You could look at this, but you're kind of getting right on that, right? So what you might want to do is when you have these congestion areas, instead of saying, well, okay, this is a small trade, look at the price range that you traded in through Asia, right? It's very small. So you could actually just say, okay, you know what? If this is the range, it's 55 pips, maybe I'll shoot for that. You don't get higher than that. So that's just basically taking a measured move of this and protecting it forward. Because it's a range, right? We're in a range. That's what's happening. Or you can clearly see our levels right here, up in here. So you can aim for that as well and ride it out. And then when you see these obvious reversal candles, you get out. That's certainly something you might want to do when you're getting a setup after a breakout, because they do tend to run a little bit better. We covered this at 6:50 in the morning. We haven't had our U.S. session open up yet, and this is London. Okay, so we're looking through here, and there's no trade there. Let's look at one more, U.S. dollar, Japanese yen. We got an up move here at 8:45, so there you go. And let's take a look. It's not bad, right? It's already broken out. You just got to decide, you know what, how you're going to trade this. This goes up to 23, peaks over here. Where do I go? Sorry about that. Right there. Peaks at 32. And if you look right across here, we're trading right in this congestion as well. And you probably don't see a reversal candle there. What we do see is a momentum candle. So you could still be in this trade. So it's kind of a longer day trade than anything. So you'd be getting out. Actually, your stop should be around here if you've moved your stop up. So that's rapid trend gainer. I guess it's not that bad. It depends on how you trade it. You certainly don't want to trade the signals blindly on anything. Keep in mind what you're looking at. You know, you don't want to be trading in this kind of crap. And how do you see that happening? Well, you think about what makes a trend. Let's use an uptrend for an example. Reverse swing high, higher swing low, higher swing high, higher swing low. And then when you get stuff like this happening, well, we know we got a problem. Okay? You know that our uptrend is breaking down. And oftentimes what you'll get is this. You get this, you get this, right? So far, so good. We're still in an uptrend, for example. If this was a swing low, okay, from something like that. If you start getting stuff like this, where you're getting your highs and lows inside the main ones, you're in congestion, step aside. It's not something you want to trade. Okay, so keep that in mind as well. But again, you know, there's a free trial. Well, it's not free. You have to put money up, obviously. But you've got 60 days to try these out. There's no reason why. And you know what? It goes through ClickBank. So if it's not working for you and you actually put in the honest effort, get your money back. It's that simple. ClickBank is really good with that. As long as you do it within the first 60 days. Okay? So take a look at it. And I will cover more if people are interested. I will look at the higher time frames as well. For this example, I was just looking at the day trading. And you can see we had some nice trades, right? We had some pretty decent trades. That's just today. Okay? I obviously haven't gone through other days. This is a 22 pip trade there. And again, people say, well, that's 22 pips. It's nothing. It means something depending on your account size, right? And since a lot of traders are undercapitalized, that may not mean a lot to some people. It may mean 22 bucks, right? Trading minis. But for other people, 22 pips is over 200 bucks. So again, depends on your account size, right? So don't base it on that. Don't base it on your account size compared to the pips that it's presenting. Your account's too small. If you want to give yourself a raise, have a bigger trading account, but keep your risk low. Do not say, well, I got $10,000 account. Now I can risk 10%. No, don't play that game. What you want to do is your account gets bigger, is actually lower your risk. But a lot of people are undercapitalized. They throw 500 bucks and they risk too much. All right. So don't look at the pip count, right? We're day trading, right? 22 pips. 22 pips is not bad, depending again on what you're trading. If you can get 200 bucks a day or 150 bucks a day, it's what more than most people make in a day. So keep that in mind as well. All right, there's links all over here. You can just pick it up, try it out. If you like it, keep it. If you don't, send it back or notify ClickBank. They'll give you your money back, and this will stop working because you have to actually put in a receipt number. All right, thanks for watching.